my name is James Nicholson and welcome to my YouTube channel. In this video, we've got some more guidance from the Bank of England on where they expect interest rates to go. You see, the markets have reacted badly to what's going on in the global economy. We've got Trump coming in, which just gives uncertainty to the markets. They're not fussed really who the president is. They just really want that person to get started and see what their policies are going to be and see what impact they have on the financial markets. Now, tariffs is something they're concerned about and they want to see how does that play out. Do they actually happen, or are they being used as a negotiating strategy? In the UK, we've got the budget. While it's happened over a month ago now, we want to see what impact does it have. Lots of big retailers are saying they would be likely to make redundancies. Is that going to happen? We won't know really until after the Christmas rush. So this video, we've got Andrew Bailey, who's been doing interviews that's given us some more guidance on where he sees interest rates going. I'm going to talk about what impact that will have on your mortgage and savings, what that impact will be on that as well. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We're going to hit 33,000 subscribers in the next few days. Look around this video, you can see how close we are, so every subscriber counts. And let's get some more views on this video by smashing like, tickling like, doing something to that like button. That helps me with the YouTube algorithm and really helps the channel grow. So thanks to everyone that does that. So what's going on? Well, the Bank of England have wanted to correct the market. You see, the market's looking at Trump being president and looking at the budget. They've just got a little bit more uncertainty. And so they predicted or forecast that we would get 2 interest rate cuts from the Bank of England in 2025. The Bank of England sees it differently, and they're saying that they feel that there'll be 4 interest rate cuts in 2025. So currently the base rate stands at 4.75%, and they're indicating that all of these cuts will be 0.25%. So we will go down to 3.75%. So firstly, let's talk savers. This isn't good news for savers. So if you have your money in a savings account, you're likely to see the interest rate cut. Normally banks cut that very, very quickly, and that's what I would expect to happen even more. So savings rates are likely to go down significantly, which won't be a surprise to anyone. But that's not good. A lot of pensioners have their savings and really want that to grow, and that isn't going to help them. But that is what is likely to happen. Now, tracker mortgages, these are likely to go down immediately. In fact, they're meant to go down immediately. We did have an instance of Santander recently when the mortgage rates went down, or the Bank of England rate down, and they should have been dropping the rate. They came out and said, we're going to delay it. I think it was around 90 days. They did backtrack on that eventually. So tracker rates, if you're on a tracker mortgage, you will see the benefit of that in the next monthly payment, which is good. That could be something to consider. And I'm going to do a video on tracker rates versus fixed mortgages, because I think now with the likelihood that mortgage rates are going down, it's something that more people are considering. So let's go on a deep dive on that. So that's a reason to subscribe if you don't already, so you don't miss that. So tracker rates will go down instantly, basically. Inflation, though, we've got to talk about that because that has increased recently. And Andrew Bailey's confident that it's very quickly going to go below the 2% target again. We had that big jump in energy costs in October. That increased us from 1.7% inflation to 2.3. If it's in the range, though, and it's 2 point something, I don't think they're going to be so concerned because consumers are being more cautious with purchases. They are down shopping in supermarkets. So I think as well, I agree, I think inflation could start to come down. Also, a lot of inflation is created by the government printing money, and they're not doing lots of that at the moment. So that is important. So inflation is likely to come down, according to them. Now, they have been wrong on inflation. They said right now we would be at 2.75%. We're at 2.3. So maybe they've got it totally wrong and it will drop even faster. What else is going on? So we're saying we're going to have four cuts during 2025, probably each quarter. But this could change. And what could increase this or accelerate these cuts is employment. And so if the budget does deemed to be totally bad for business owners, which a lot of people are saying it is because national insurance has increased, minimum wage has increased, energy costs are increasing, and some businesses that didn't pay business rates are now having to pay business rates because the small business rate relief is also getting taken away. It's so much pressure on them. If we get more unemployment, we could go into a recession and we could cut rates faster. So that's one thing that they've got to keep an eye on. The other is a trade war. So Trump isn't saying he's putting tariffs on UK. He is talking first and foremost about Mexico and Canada, but that could creep across to everywhere. And so if there's some sort of trade war, then that could really push inflation up quite quickly and slow down like a lot of this rate cutting measure, which wouldn't be ideal for anyone. So where do we sit on rates that you can get? Because just because the Bank of England dropped doesn't mean that you're going to get a cheaper rate. And so their expectations are by a lot of people that provide mortgages. John Charcoal talked about this week, and a lot of other places are saying we could start to see sub 4% mortgages late spring of 2025. Here's why it's unlikely to happen before. So we've got some rates very close to it. We've got 4.1% with NatWest. The reason a lot of people don't think that mortgage rates need to come down particularly fast at the moment is you've got that stamp duty deadline. So there's a lot of people that will potentially buy now, between now and February. March is when the cutoff ends, but they'll want to get the transactions over the line before that deadline. A lot of people will want to get those deals done because stamp duty is going to increase. So the market is expected to be fairly busy until probably late February. By then, it's almost too late you can't get a property. It's unlikely that you get a property very early March and complete by that stamp duty deadline. So the market will slow down a little earlier. And at that point, mortgages, applications probably will drop. So I think that in April, you will have less mortgage applications. And that means the banks will start to slow down. Then they might start looking to cut rates to you guys to get the market moving again. And that's something to keep an eye on. So that's it. That's good news. The Bank of England are re-clarifying, and they don't often like to say about if they're going to cut, when they're going to cut, and stuff like that. But the fact that they've come out and said, look, we're looking at 4 cuts next year is good. You don't often get that in their press conferences after they do a rate cut. So it's interesting to have this data, and that helps correct the markets and get their expectations back on track. Let me know your thoughts on this. Do you think the Bank of England are right or wrong? Do you think they're going to cut 4 times? Or do you think the economy is in such a situation that we're likely to go into a recession, unemployment's likely to rise, and they'll have to cut considerably more in 2025? Let me know in the comments below. Do smash like, do subscribe. As I said, we're nearly at 33,000 subscribers now. And check out all the other content on my channel, including this video right here.